It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
It is hard, and I do think in some instances the bank will lend 90% still. It is a big ask to save the 20% and then the on-costs as well, obviously, including the conveyancing, stamp duty, etc. But I guess everyone's situation's different.
And that is Edward Thomas there in Melbourne on the Real Estate Breakfast. And we'll get back to him in just a moment as we launch into another episode with more property information, connecting you to the largest real estate podcast library across Australia. 7 days a week we are here. And remember, we are not a real estate company, so we're not trying to sell you anything. And you can stream and listen to us anytime on iHeartRadio, Spotify, Apple Podcasts, as well as Amazon. And the weekend is turned up. Saturday, March the 8th, well into March now. And finding an affordable home often means making compromises. How many of those compromises, particularly you first home buyers, have you had to make in many suburbs around Melbourne? Well, located within 5 Ks of the Melbourne CBD, there is on offer median unit prices for under 500k, delivering affordability, and they do say without sacrificing location. Well, you're pretty close to the CBD. Domain tells us that there are a couple of standout suburbs, one of which we'll talk to Edward about in just a moment, which is Travancore. That is leading the list, and we've also got Flemington there. And this comes as Melbourne's unit prices rose nearly 12,000 in the December quarter, bringing the citywide median price to around 577,000. That's the latest from Domain data. So let's catch up with Edward in Melbourne, who is the Managing Director for Edward Thomas Estate Agents. And good morning to you, Edward. Welcome to the Real Estate Breakfast this morning. It has been just over 3 weeks ago the RBA reduced the cash rate. We were talking about this the other day, just in terms of what does it actually mean for buyers and also sellers, I guess, moving into another property. So what is happening in the suburbs that you represent there?
Yeah, good morning, and thank you very much for having me on your podcast this morning. So I guess in answer to your question, there's been a hell of a lot of supply that has obviously hit the market in our core areas, and that's really helped obviously the choice for buyers. And yeah, I would just obviously put it down to supply and demand, but there's been a hell of a lot of supply that has come up, which has been great for buyers.
Now, the time to save for a 20% deposit for an entry-priced home for a couple aged between 25 and 34. In Melbourne, for a house, that is taking you about 5 years and 1 month. For a unit, 3 years and 5 months. Still reasonable amount of time, isn't it, to be saving? What are the conditions at the moment that you're looking at with people that are trying very, very hard to save for that 20% deposit?
Yeah, it is hard, and I do think in some instances the bank will lend 90% still. It's such a varying range, I guess, situations with different buyers. It is a big ask to save the 20% and then the on-costs as well, obviously, including the conveyancing, stamp duty, etc. But I guess everyone's situation's different. There are buyers out there that have saved that money and that are ready to go. There are buyers out there that are looking towards their family for assistance to be able to get that 20%, to be able to get out of the rental market, be able to purchase, and then even potentially be able to pay that money back to whether it be their mother or father or both over a length of time.
Now, I mentioned Travancore. This is leading the list there in Melbourne with very affordable pricing. The median of a unit, $373,500. Tell the first-time buyers that are listening a little bit about this suburb. I know you were telling me off here it's not that big.
It's a suburb that most people, I think, across the state of Victoria probably haven't heard of. It's a very small suburb that is in between Flemington and Ascot Vale. It's got great access to all part of Melbourne. It really is a wonderful location. You've got easy access straight on to CityLink, straight out to the airport. You're surrounded by trams, easy access into the city. Most of the apartments in that suburb have been constructed within the last 15 years, and they've been constructed on Mount Alexander Road. So even though there's a small amount of apartments within the suburb, it still shows incredibly good buying, especially for the location that it possesses.
Yeah, so $373,500 or thereabouts, maybe up to $380,000. What is somebody actually getting in terms of space, etc.?
Look, the average apartment size that's been constructed there would be between 50 to 60 square metres. You get the 2 bedrooms, you get 1 bathroom, and in most cases you get a car space as well. So it really is a fantastic entry level for people that want to get out of the rental game, that want to get into a property. It's one area that I would highly recommend.
And what about Kensington? Because for under 500K, buyers have got a bit of a choice there. Very much high demand and strong turnover, indicating that growing appeal among both homeowners and investors. So what's happening around Kensington these days for both, and I should mention both first-time buyers. First-time buyers will hate me saying this, but also for investors.
Look, there's lots happening in Kensington, lots of infrastructure, lots of new apartments through Kensington, through North Melbourne, West Melbourne, Arden. There's been lots and lots of construction going on, which has really been fantastic for the suburb, and it's really opening up the suburb to a lot of new people. There's probably more construction going on in the inner northwest, which is what I would call North Melbourne, West Melbourne, into Kensington, than most parts of Melbourne. We're fortunate the fact that we're going to have the new metro link that's going to be open. My understanding is at the end of this year, which is going to incorporate the new Arden station, which is going to link the Kensington, West Melbourne, North Melbourne market up to the new Anzac station on St Kilda Road. So in terms of being able to access all parts of Melbourne, and in terms of the amount of number that apartments are being constructed, it's a fantastic place to either invest or live.
All right, we are talking to Edward Thomas there in Melbourne on our Saturday morning. We'll come back and look at some of the bigger spaces that you can buy into. We'll talk about that in just a moment, and also the entry houses and the entry units and how they have fared both over the last 12 months and the 5-year period. We'll talk all about that after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
Yeah, these numbers are pretty interesting. If you look at Sydney and Melbourne, they're expected to benefit the most from rate cuts. In fact, you guys broke this down. Some suburbs like Leichhardt have historically seen house values jump by 19% following a 1% cash rate drop. So again, tell us a little bit more about that.
Sure. So the most sensitive markets to cash rate changes tend to be in Sydney and Melbourne, and they tend to be pricier parts of those cities as well, potentially because people have to go into more debt to buy into expensive markets. So the cash rate is obviously a big influence there. And for a lot of these markets in Sydney and Melbourne as well, they have a relatively high concentration of investment activity, high wealth and high income individuals buy into these markets. So with the cash rate and mortgage rates determining the holding costs and return on investment properties, it can be a big influence as well. For an area like Leichhardt, we see that values are also more sensitive to rates going up, as we've seen in the past couple of years, where values are down about 7% from their recent high. That also stands to make them more likely to benefit from a cash rate reduction.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
And it is a Saturday morning. The weekend is here. You might be heading off to an auction. You might be going to an open home in Melbourne today, having a look at some of these suburbs that we're talking about. Already talked about Kensington, Travancore, of course, with that magical price, and Ascot Vale. Now, I want to talk about this, Edward. Bigger spaces, a little bit of a lifestyle for people under 500k. For those that are seeking more space, Ascot Vale offers larger units at a comparable price to Kensington. So tell us a little bit about this spot.
Yeah, that is correct. It's a wonderful location. There's lots of fantastic infrastructure, still easy to move around all parts of Melbourne. While it is approximately 8 kilometres from the city, where Kensington's sitting at about 5 kilometres from the city, the infrastructure in Ascot Vale, the extra size in the apartments, and there's a lot more variety in Ascot Vale between the older apartments and the newer apartments. The old apartments do tend to be a little bit larger, but there's still definitely great buying opportunity under 500,000 in that suburb.
Don't forget, of course, make sure that you do your strata due diligence. Make sure that you are right across that if you are buying a unit. Now, let's have a look at the Melbourne entry house price point at the moment. This is from Domain, $670,000. Over a 12-month period, what has the growth been on the entry homes in Melbourne? 0 is the answer. Over a 5-year period, 11.7%, 70k in your pocket. And if you have a look at the entry units, $437,500 annually over the last 12 months, that has gone backwards, minus 1.2%, taking a bit of a hit in your pocket of $5,500. And over a 5-year period for an entry unit, it's also gone backwards, minus 2.8%. That's a loss of $12,500. So you can sort of see the softening in those numbers, Edward, as reported by Domain.
Yeah, absolutely. And I just think that's been the state of the play for the whole of the Victorian market, certainly the whole of the Melbourne market since the coronavirus and since obviously your new legislation, obviously land tax. There's been a lot of things that have affected our market in Victoria that's been a lot more affected than New South Wales and other states across the eastern seaboard of Australia. But I do feel that we are undervalued. And I do feel that investors are starting to come back to Melbourne. And I do believe that we will have, and I'm not saying that the interest rate it has been a shot in the arm for the market, most definitely. I'm not saying it's going to fix everyone's problems by any means with only one interest rate cut, but I do feel like Melbourne has definitely been languishing behind other cities. And I do feel like that it is a good place to live or invest and that the growth will be there over the next sort of short to medium term.
All right, thank you for sort of breaking all of that down and coming on to the real estate breakfast on our Saturday morning. Enjoy your weekend and have a great 2025.
Yeah, thank you very much. Thank you for having me.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated.
Investors are buying sight unseen, subject to building and pest inspection. Now, the draw card for Toowoomba investors is the fact that it is a constant growth. And when they ever have to sell, they know they're going to grow their money.
And before I let you go, congratulations too, because I understand that you're one of the highest achieving real estate agents for RE/MAX right around the country. Did you say the top selling agent?
Yes, I just won that big award, which I'm very thankful to all my sellers who trust me to sell their properties for them. Yes, I did win that big award. Number 1 in Australia for the most amount of properties sold and the most amount of commission generated. So that was really exciting and very, very thankful for.
We connect you to the best real estate information across Australia. The Real Estate Podcast.